now let's talk about the entry in the reversal of a trend. So how do you know that the trend is finished or it is reversed, and how can you make use of this opportunity to make money? Let's see. In uptrending market, the trends come to an end with a rejection candle. So this is one of the strategy. We can see a reversal candle at the end of the trend. This indicates that market participants are not willing to allow the prices to continue to decrease. So they are not allowing the price to decrease or increase. So when it shows at the crucial support or resistance, this indicates a high probability trade that the new trend is going to come or the stock is going to get reversed. And this time you can enter a trade. So not only after seeing the reversal candle, oh, the trend is reversed, I can enter. No, you should wait for the confirmation of another candle or another two candles, and then you can enter the trade. And the initial stop loss will be below the entry candle as usual. We keep it. So as you seen in this picture, this is the curve line. The curve line is the support or resistance. Yes, you see that there is a reversal candle forming here, and you can see that another red candle, another big red candle. So we are entering at the breakage of this candle. We are entering the trade, and all the way we are looking at profits. So similarly, as a rejection candle, which has another key point to notice, it has a long tail during the reversal. The counter trend is the rally of the trend is likely to finish, and the new pattern will emerge, and it is the sign that it is the time to take action. So similarly, we can see that the downtrend is coming to end with a reversal candle, another confirmation candle. When the height of this both candle breaks, we can enter a trade. So we are keeping the initial stop loss at the end of this candle.